Hello, everyone. Welcome back. This is Seewing Yi, and today I'm going to use a article, news from CoreLogic, dated January the 5th. So let me share my screen and let's go ahead and share with you the title. It just came out a couple of days ago by CoreLogic. CoreLogic's major U.S. housing market trends of 2022. Uh, so they're gonna highlight what's happening, this past year, 2022, as we are moving forward to the 2023. Very, very exciting 2023. I expect a lot of a great ongoing weekly exciting housing headlines, which I will share with you on my weekly videos. And toward the end of this video, if you see a lot of value in this presentation, please smash the like button and also subscribe to my YouTube channel and also make comments below. Oftentimes, I would love to respond, and I'd like to know where you're located in the country, what you're listening to, and make some suggestions as to how you want me to present in the future, pros and cons. And yeah, so I really enjoy doing these kind of videos for you guys. I'm very, very transparent. I'm not clickbait, as you can tell by now, and I produce very ethical, very responsible reporting. I go through the data and trends, no misleading, inaccurate, clickbait type of a video like a lot of YouTubers are doing out there. So anyway, so hope you enjoy this. So let me go ahead and share my screen and let's get started. Some very, very good highlights. And as always, I will share with you my takeaway on each of these highlights, which I feel is relevant. I may disagree on some of this information. I may not. We don't know. We'll see. And again, so I can only use my 30 years of real estate investing experience to share my wisdom and my thoughts and have my take on it. And this is purely my opinion. But then again, I helped thousands of real estate investors throughout the country to buy in many different markets in the US. So I have a big picture, high level understanding of many, many sub markets in the US where our investors are buying, turnkey cash flow homes in a very affordable markets in the country. So they could get their property rented out to achieve cash flow for the long-term buy and hold turnkey, mainly single-family homes investing. So without further ado, let's go over the U.S. housing market trends by CoreLogic, and the highlight is brakes, putting the brakes on the U.S. housing market. So the word brakes is the pretty much the YouTube title for me. Okay, again, dated January the 5th, only a mere few days ago. So it's very fresh and very real-time information. So let's get started. Let me put on my reading glass. And the second paragraph mentioned year over year for the past 130 straight month, which up until November. By the way, this is as always, in case you know by now, any kind of news article that comes out by any major news media websites is a lagging indicator. That means it's always like a couple of months behind. So in this case, this article is dated up until November 2022. So the past 10 years, we have seen consistent annual appreciation nationwide. So that's good for those of you that already purchased your home for owner-occupied purposes, for investment purposes. If you bought in the right areas in the country in the past 10 years, in the past 130 straight months, you have achieved very consistent wealth building. So good for you. However, here are the challenging part, right? So still, most homeowners were in positive equity territory throughout the first 3/4 of this year, and mortgage delinquencies and foreclosure rates remain near historic lows. the wild ride known as the U.S. housing market slowed dramatically in the fall of 2022 as mortgage rates surge and home prices remain high, said Molly Bozo. Bozo? Okay, Bozo. Did I pronounce it right? Boelzo or Bozo? Anyway, sorry for my chuckling. Principal economist at CoreLogic. And home sales started strong early in 2022 when the mortgage rate were around 3.5%, but then it took a nosedive because stupid Federal Reserve, they try to combat inflation, so they raised the rent all the way up to this past October, a couple of months ago, all the way to the mid sevens, the mortgage 30-year mortgage rate. Now it's back down to around in the mid sixes, which is, it's a sticker shock, okay, to say the least. So this paragraph goes on to say, generous amounts of home equity will protect many borrowers from experiencing the type of foreclosure activity seen during the Great Recession. So basically, it's saying that we are, okay, the bottom line is, we're not going to see the 2008 housing crash, not this time. This time is completely different because people have a lot of home equity and many other reasons. So you're not going to see any kind of housing crash, in my estimation. They're very clear on that. Okay, so let's get back to the article. All right, so getting back to the article. So according to the CoreLogic monthly home price index data, the U.S. year-to-year home price growth has reached 20% in April of 2022. That was before the interest rate has skyrocketed. The highest level recorded in more than 2 decades. So 20-year run of very positive monthly home price index data, according to CoreLogic. However, appreciation has tapered off every month since, falling to 8.6% in November of 2022. Yep, that's right. The skyrocketing interest rate caught a lot of people by surprise during April and May timeframe of this year, and now here we are right now. All right, here are some important positive news for me and my investors, especially Sunbelt states led the nation for annual home prices gains for most of the year, notably in Florida, which posted the highest gain in the country from February to November 2022. This trend partially reflects Americans migrating from more expensive areas in the West to more affordable areas of the country. However, the price growth in southern states have followed the national trend and slowed in recent months. Well, so again, I have taken my group of real estate investors, several thousand of you on my database, that is, only a few hundred of you took my advice and allowed me to guide you, and many of you have bought in the boom towns, pandemic boom towns of Texas and Florida. And as investors, you guys have a buy and hold strategy. You guys have done very, very well, gaining the past few years, 30, 40, 50, 60% in appreciation of your rental properties. And your rent has also skyrocketing as well, giving you more cash flow than what you expected. So good for you. Okay, so I tell my buyers, investors to do not sell, right? If you sell, you will be subject to the volatility of the current correction of the housing market. So you buy and hold for the long term, you will be fine. You will ride out the storm. Speaking of storm. All right, so that's the mindset. That's the investment philosophy of whether you are a primary homeowner or investor, buy and hold for the long term, ride out any short term storms, and you will be fine, because things will be fine always. Buy and hold long term. If you learn nothing else from this video, this should be your takeaway buy, invest for the long term, buy in the right market, surround yourself with a good team, and you will be fine. All right, let's go on with this article. And this year's spike in interest rate is a primary factor in moderating home price growth. Yes, that's pretty obvious. Very, very painful this past 2022. Freddie Mac data put the 30 fixed rate mortgage at 3.22% in the first quarter of this year, 2022, which is historical low rate, which you will never get this again in your lifetime, this low historic interest rate. Now, I mean, then even way back, the Federal Reserve, they really are impacting the housing market and even the economy this past year. Jerome Powell and his idiots. Anyway, and it's what else? However, there's a silver lining. Okay, the silver lining. Despite the slowdown, a shortage of available homes for sale, strong mortgage rate underwriting standards, and unemployment rate that has returned to pre-pandemic levels are keeping the housing market relatively healthy and making a major downturn unlikely. So 3 things to take away from this article for me is the shortage of homes, is a low supply of inventory, and the buyers out there, primary homeowners, I know you can put less than 20% down. In the past few years, primary homeowners, if you put at least 20% down payment on your primary home, you do, and you have a long-term buy and hold strategy, you should be fine. Real estate investors, clearly you have to put at least 20 to 25% down payment. So the mortgage underwriting standard is such that only very highly qualified buyers are able to qualify for mortgages. So you guys have a skin in the game. If you stick it out, don't sell, if you don't have to, you can ride out the storm. Okay, so that's what that paragraph is saying. And the low supply inventory, you know, the healthy, a balanced supply inventory is around 5 to 6 months. Nationwide, according to Redfin, we are at a 3.3% month supply of inventory nationwide. So still, believe it or not, seller's market, still economics 101. When demand is greater than supply and there's a low supply of homes right now, it's not going to change that drastically at all. So we should be moving forward, we should be okay in terms of the housing market, in my humble professional opinion. Right. So yeah. So again, to recap this very important paragraph, as I highlighting here, it's very hard to get a loan these days because of the for a lot of reasons. So for the people buying homes right now, they have a lot of skin in the game, high down payment, low supply of homes moving forward as we speak, even though the inventory has increased quite dramatically in the past few months. Still compared to the pre-pandemic, is still the supply of home nationwide is still very, very low relative to the demand. Okay, so any major downturn is unlikely. A real estate crash is highly, highly unlikely, unless the worst case scenario were to occur, which is not likely. All right, based on historical past. Home equity growth remains strong despite a cooling market. You bet your life. You bet your life. The people that bought homes in the past couple of years, the people that purchased homes in the past 10 years or longer, they have a historic, massive amount of equity in their homes, and they're locked in. They're locked in at a very, very low historical interest rate, 3.8 trillion with a T in home equity since the first quarter of 2021, which is mind-boggling. This is a 32% increase. During this period, this past couple of years, the average U.S. homeowners with a mortgage has gained an average of $64,000. So good for you. Congratulate for those of you that have purchased homes As long as you keep it long term, don't sell. Again, if you sell right now, you're subject to a housing price correction. So, all right. So that's my message to you. That's my message. All right, mortgage performance is healthier than ever. CoreLogic's loan performance index shows that despite 2022 surge in mortgage rates, almost all borrowers are able to meet their monthly payment this year, and the monthly mortgage delinquency of at least 30 days late were only 3.4 to 2.7%. With the latest data reporting a 2.8% overall delinquency rate in October 2022. So on an annual basis, mortgage delinquencies dropped for the 19th consecutive month of October. So for those of you who are praying for foreclosure prices to get some deals, well, you're going to be waiting for a long, long time. I would not bet on getting some foreclosure deals for if you even think about try to get into this niche market. So things are very different. People are not going to walk away from their homes, especially most of them have equity. They rather sell the homes and rather than let the bank take over the note. All right, so that's enough. Foreclosure market is not going to happen relative to back in 2008 housing crisis, housing crash. It's not the same at all. Completely different housing market. All right, so 99% of borrowers have lower mortgage rates locked in the current rate. That's very, very true. They're not going to trade a 3% 30-year fixed rate mortgage to move up to a 6.5% mortgage. And with the higher price point, they have to buy, and therefore increasing their mortgage payment by a whopping 66%. So, yep, homeowners are not selling, and home buyers are too scared to take the plunge, and home builders are not constructing new homes. So we have the trifecta. I call it the trifecta of challenges moving forward, but it's a good thing for the future, for especially for prospective home buyers and especially for real estate investors that have a good opportunity to pull the trigger in the times of crisis. That's the key for real estate investors. When there's a time of crisis, there are massive opportunities, and myself included, and my core group of real estate investors, we are taking the plunge and taking advantage of the low competition, getting some good deals, not great deals, but decent deals in specific markets, particularly in the South and Southeast and in the Midwest, where homes are still extremely affordable, when price appreciation is still occurring in many parts of the South and Southeast and the Midwest, contrary to the mass media negative headlines and doom and gloom scenarios is not that bad. So, and finally, the last article I would like to highlight is the CoreLogic's monthly single-family rent index shows the year-over-year rent growth slow only to 8.8% in October, down from almost 14% rental rate increases this past spring of 2022. Florida cities led the nation for annual rent increases for much of the year, with Miami and Orlando holding the top two spots respectively since January. So, our investors that purchase, a lot of our investors have purchased rental properties in Florida for the past 20 years through my direct guidance. But for those that purchased in the last couple of years in Southwest Florida, Cape Coral, and Central Florida, I think your rents have increased dramatically, double to triple digits. So you got some decent cash flow when you bought a couple of years ago, and massive amount of appreciation. But the rental rate increases have, double and triple rent increases in the past 18 months. I know right now it's down to single digit with the rental increases. but you're getting you're getting double, triple whammo in investors out there that purchase in a good markets through my guidance. So you're getting some amazing cash flow, amazing appreciation so far. Okay, I mean, so who knows about the future? But the takeaway from the CoreLogic article I just shared with you is that there's a silver lining. It's not all doom and gloom. Yes, we will see some correction going on in specific markets, like in there will be some price decreases. A lot of experts stating there will be a 5 to 10% correction, reduction of home prices in certain markets, like in California, and few boom to bust pandemic markets such as Boise, Idaho, Phoenix, Arizona, Las Vegas, Nevada, and Phoenix, Arizona. But this is a short-term, correction situation. So the other markets, South and Southeast, can do very well. So just just everyone, a single one of you, just put your financial house in order. There will be a lot of opportunities. Just have a positive mindset and think long term. Who's to say you can even buy a home right now if you have a good budget, if you have a good cash reserve, if you have good job stability, then who's to say you should not buy right now? But as long as you buy for the long term, at least 7 to 10 year hold for primary homeowners out there. For real estate investors, you buy in a good market with cash flow with 25% down payment, good, affordable, low-cost markets in the Midwest and South and Southeast, and get yourself some turnkey, out-of-state professional property management. So you can do very, very fine. Thank you so much. And if you see a lot of value in this presentation, please smash the like button and subscribe to my YouTube channel so you can get some regular weekly updates on very relevant real estate information. So, and subscribe to my channel, and of course, subscribe to my email newsletter at the bottom on my website so you can receive free weekly real estate investing information that will come into your email inbox. And make a comment below what you think about this video and any improvements, any suggestions. Tell me who you are or where do you live and what's your real estate goals and objectives. I'll be more than happy to make a quick reply comments to you. And thank you so much for listening. And this is Seewing Yi, and I will see you on my next video very, very soon. Have a nice day. Goodbye. Happy New Year. Bye-bye.